What's going on, everyone, and welcome to our video series about bearish markets or choppy markets or sideways markets. We're in this playlist, so make sure you stick around and watch all the videos in this playlist. We're going to show you various tools that you can use to hopefully do some better research, follow the charts and price action in a more vigorous and analytical way, and really just so that you have a new tool to use to perform your best market analysis. The first one we're going to show you are the date range, the price range, and the date and price range. Now, the reason why this tool is first, why we want to show you this, is because understanding a bearish market or a correction or a drawdown or a choppy market, you first need to know how far a symbol has gone from its peak to its current price. By measuring the distance from these 2 points, you can instantly learn just how fast a symbol is moving down, or if you were looking at a bullish market, up. And if it is moving down extremely fast, well, you can make some judgments about what type of market you're in. So, for example, we are looking at a chart of the Dow Jones Industrial Average. We can click the price range tool, and we can click the most recent peak. Then all we have to do is move our mouse down to the most recent price and click. Now the tool is set. So why are we showing you this and talking about bear markets or corrections or drawdowns? Because this is how you measure a bear market or correction or drawdown. Now remember, those are 3 terms you're often going to hear investors and traders toss around. They might say bear market, and people will often measure a bear market by a 20% decline from peak to bottom, and generally you want, a bear market will actually last for several months, potentially years. Now, a drawdown is a way of just measuring peak to bottom. It doesn't have to be 20%. A drawdown could be any percentage drop from peak to bottom. Peak to bottom, any percentage. And when you hear us say correction, it's the same thing as a drawdown, but generally corrections are measured in 5% and 10% peak to bottom moves. So let's just talk about this some more. One important thing about corrections, when you hear people say that, is you can kind of think of it as the market is correcting back to a price that is more reasonable. Oftentimes, as we know, markets never go up in a straight line. Sometimes there's euphoria, mania, there's more buying than selling. Something will just catapult, maybe go parabolic, and the price over time might correct. It might drop 5 or 10% and return to a more stable price, at which it may find sort of a bottom and then continue in its direction. Could be up or down. Keep in mind, everything we say here is applied to both upward markets and downward markets. But before we really dive into these tools, we want to make sure you understand the terminology. Okay. So now that we know what the terminology is and how to measure the moves, we can start to really understand what type of market environment we're in. So before you're ever going to buy or sell anything, probably a really intelligent move might be to open up a chart like this. This is the Dow Jones Industrial Average. Or if you're interested in crypto, you could open up a chart, so this would be Bitcoin, and do some basic measurements to get a feel for where the market is. So this is a chart of BTC USD. Let's get a feel for where the market is. We click Price Range Tool. We click the peak. We go down to the current price, and we see a 48% drop from peak to the current price. That is pretty substantial. Now, for crypto, as we're going to show you, that actually might be normal over the course of its history. But the point is, we're doing some research to understand what kind of market we're in. Now, everyone is going to analyze and chart markets differently, but with this simple tool, this simple price range tool, you can click the peak, go down to the current price, and get a feel for what type of market environment you're in. Let's say you are holding Bitcoin, or let's say you are looking to buy Bitcoin. Now, with this new information, you can ask yourself, is this something I want to rush into? Is this a market I actually want to stay away from because it is so red and it is going down to this extent? These are all questions you can now ask yourself. Various traders and investors have different opinions. Some might think this is a great dip or it's a discount. Others might think that actually they want to stay away from such a down move because maybe it's actually just going to continue lower. We don't know, but this is part of the process. We're trying to figure that out with the research. Now, as you can see here, we are zooming out on the chart. In fact, we're going to turn this into a weekly chart and really look at Bitcoin. We're also going to do log scale over the long term. Why are we doing this? Keep in mind, as mentioned, we said that Bitcoin is in a 48%. It's in a 48% drawdown. That sounds like a really intense down move. A bear market, a correction, a drawdown, a crash. Once you get to that 48%, nearly cut in half from its previous high, all of these terms come into play. But, and this is why this is the first video in this series, you can use the price range tool to go back in time to learn more about what this means. So you can see what we're doing already, right? We just went back to 2017 when Bitcoin hit this price here, and we used the price range tool to measure it all the way down until it finally found a bottom. And if you look closely, Bitcoin had an 84% drawdown in 2017. Today it's 48%. Yes, these are both massive moves down, but what we're trying to convey is that this is how you can get a sense of the volatility that can potentially be expected when you are doing your research, deciding if you want to buy or sell. It's just learning the history of a symbol so you can really, hopefully, make better decisions with that information. So now, as you can see, we've actually just highlighted another moment on the chart, another 80% drawdown. And this is where you need to ask yourself, if you're long and you're not really liking the way things are going, or if you'd rather do something else, maybe you might say to yourself, I don't want to sit through an 84% drawdown. We're at 48 now. Or if you're looking to buy, you might say, should I rush in at 48 or could it potentially go even lower? Now, keep in mind, we only measured two very large drawdowns, but there's so much more that we have to consider here because if you really start to look at the chart, there's been many moments where Bitcoin has corrected at a smaller scale. I mean, this is a 60% drawdown, not quite 80%. That's just the simple point we're making. This crash here is, let's see what this is. This is about a 50% drawdown, so 49%, so very similar to this. But you kind of get what we're doing. You're learning about all the drawdowns or corrections or crashes or bear markets in a symbol's history to get a feel for what to expect, or maybe just have more historical price movement in mind so that when you are planning out your trade, not only do you know what type of market you're in, and what we mean by that is you're in a 48% drawdown, but you can also now understand some of the previous instances in the symbol's life cycle and what happened. So this is the first video of our series, and it's all about learning the price range tool. We hope that we showed you how to use the price range tool and why it's effective. Before we head out of here and move on, there is one more component here, and that is the date range and the date and price range. So of course you can measure drawdowns with their, percentage downward move. And remember, you can also measure its upward move as well. Keep that in mind. But now you can also measure the date. How long and how fast did it happen? So we can use the date range tool to see 371 days. So now we're measuring price and time extremely effectively and efficiently just by using these two tools. The date and price range tool is going to show you this information combined into one, and click, and now you can see 54% drawdown over 119 days. Well, why does that matter? Well, you kind of want to get a feel for how long these drawdowns or corrections or crashes have happened. Do they snap back quickly historically? Do they last a long time historically? And more importantly, going back to the type of market environment we're in right now at the time of this video, well, if we just do a date range and click this peak here and go to the current price, you can see we've already been through 175 days of downward price action. It's just been going down, quite frankly. 175 days. That is a long time. And whether that's abnormal, normal, or normal, that's up to you to decide. More importantly, it's up to you to head to the chart and to perform that research to figure out if it is abnormal or not. As we mentioned, you just click the date range, and for example, you can click this and go to here. This is a 364-day drawdown, and let's see, let's do a few more quick ones. Even if you were to do from this peak to here, you can see this was rather quick. This was the COVID crash. That was a 2-day. This was a 28-day crash, so quite fast. And let's just do another one. How long is this from 2021? This was about 98 days. So you're really doing your research, and if you wanted to, you could also jot these notes down. You could write correction 1, 28 days, correction 2, 98 days. You get the idea. This is your research. You can write it directly on the chart. Don't forget, you also have text notes at the bottom that you could also use as well. So we hope that you enjoyed this video, and we look forward to your comments, questions, and anything else you want to bring to the table in the comments below. Thanks for watching.